Hello, welcome to the weekly technical analysis review here at XM.com. I'm Rafi Boyajian, currency analyst, and today is Monday, January 15th, 2018. Today we're going to be looking at the dollar yen, the euro dollar, the pound dollar, and WTI oil futures. So let's start with dollar yen. We can see the pair is looking fairly bearish at the moment. RSI has fallen sharply over the last few days, though it hasn't quite crossed oversold territory. It is currently flatlining at the 30 level, so it means that the current bearish bias will continue in the near term, while it's too soon at the moment to say whether or not we're likely to see any upside correction. The pair did breach the 50% Fibonacci retracement of the up leg from 107.31 to 114.73. So the next key support level should then come from the 61.8% Fibonacci at around 110.15, and then a breach of that level would then take it to at the 109 level, and just below that 108.90 we have the 78.6% Fibonacci. Should the pair attempt to go higher though, resistance will likely come from the 111 level, that's the 50% Fibonacci. Then we have the 200-day moving average at 111.69, followed by the 38.2% Fibonacci at around 111.90. If you look at the medium-term picture, it is looking slightly bearish, since the price action has now moved below all the key moving averages, although the more longer term picture though remains pretty much neutral, as it's still within the range that's been in place since early 2017. Let's now move on to euro dollar. We can see euro dollar is very bullish at the moment. Prices breached above the 161.8% Fibonacci of the down leg from 1.2089 to 1.1915. Having broken that level, the next target should come from the 261.8% Fibonacci at 1.2370, and above that we have 1.2650 at the 423.6% Fibonacci. If we look at the momentum indicator stochastics, we can see they're still rising in the daily chart. It's nowhere near to, although one of the lines, the percentage K line, has crossed into overbought territory, it's still sharply above the percentage D line, so it's not pointing to a downside correction anytime soon. So it does suggest that the rally has some way to go, at least in the near term. If you look at the medium term picture, it's also very bullish. We can see the MACD has risen even more sharply above its red signal line, and of course the moving averages are trending upwards. The 50-day moving average has crossed above the 100-day moving average, but should we see a downside reversal, support should come from 1.2195 at the 161.8% Fibonacci, and below that we have the 1.2089 and then the key 1.20 handle as potential support targets. Let's move on to pound dollar now. It's very similar picture to the euro. It's looking very bullish. RSI though has crossed into overbought territory, so the rally could be coming to an end, or we could see some near-term correction or consolidation. Prices did break above the 1.37 level for the first time in 1.5 years. It does appear to have found resistance at around 1.3835, or just below that level. 1.3835 was in fact a low from back in February 2016, so that low could now be acting as a resistance area, but should we see further upside, the next target should come from the 261.8% Fibonacci at 1.3947, followed by 1.4345 as potential targets. To the downside, we have the 1.37 handle, and then the previous resistance around 1.36 could potentially then act as support levels. And finally, looking at WTI oil prices, WTI oil futures, we can see it's also bullish at the moment. If you look at the stochastics, though, it is pointing to the possibility of downside correction. Percentage K line has slipped below the percentage D line, although they're not trending downwards too sharply, meaning that it's for the now it's still holding, and we can see previous attempts for the percentage K line to dipping below the percentage D line hasn't led to a downside correction. In fact, it's held within overbought territory. But one thing is for sure, it does appear to have run out of steam at the moment. You can see the 261.8% Fibonacci of the down leg from 59 to 55.79, around 64.19. So this is proving a bit of a resistance area at the moment. A successful breach of that level could drive it towards the 423.6% Fibonacci at 69.39, and then a break above that level would take it to the key 70 handle. But if the downside momentum should we see continuation of that in the coming days, we're likely to see 63.40 acting as the next support area, but a break below that level could drive it back towards the 61 level. If you look at the medium-term picture, look at the MACD, we can see that the medium-term bullish picture has been strengthening, with the MACD rising steeply and comfortably above its red signal line. That's it from me. Thank you very much for watching, and have a great day.